Morning, everybody. This is John Blank, Zacks Chief Equity Strategist and Economist, and today is June the 6th, 2022. And on this Monday, I'm going to give you a set of 20 stock picks in the housing, construction, building materials, and REIT sector that are doing quite well in this remote working environment that has now emerged post-COVID. So first off, let's get through some disclosures. First of all, the views today are just of mine, John Blank, PhD. They are not necessarily the views of Zacks Investment Research. Past performance is no guarantee of future results. So please go ahead and read the rest of these disclosures. We do this every time when I do these slides, but they are important. Okay, so like I said, today we're going to talk about Zacks 20, at least 20 remote working winner stocks. And I want to talk about winning stocks, things that you can put in portfolios today. So we're going to start a little bit on some macro, but we're going to basically spend a lot of time going through housing, construction, building materials, and REIT stocks that are doing quite well in the remote working world. So we'll break this talk down into two parts. Part one, a broad overview comparing US and global housing macro. Need a little background, kind of tie us to our parts last week or 2 weeks ago, where we talked about the housing market particularly. So now we need to dive into all the major REITs stocks, all the material stocks, all the construction stocks, all the major housing stocks. So we're going from basically top down to bottoms up today. That's basically the strategy. So first step, a broad overview of all things home related. Remember why we, in a remote working world, basically people stay at home. I don't think you have to have more insight than that. This has changed the dynamic of all economies around the world, particularly service economies, but it's also driven goods production up. And we're waiting for this transition for the service economy, which has been somewhat sluggish because everybody's staying at home. And this is driving all kinds of behavior around the home, building the home, putting materials in the home that are new, remodeling the home, furnishing the home, you name it, it's all about the home. So real residential property prices around the world, 2015 to the present. Okay, first of all, in the top left, you've got New Zealand, Australia, Canada, UK, Euro, and Japan. So those are particularly, United States specific type countries. To the top right, we've got China, India, Indonesia, and Korea, Thailand, basically Asia. And then down at the bottom on the right, we've got Brazil, Mexico, and the others. To the left, below on the left is France, Germany, Italy, Netherlands, Portugal, and Spain. So it's basically the rest of Europe. A lot of material here. You're going to want to get these slides. This is a very important subject. Basically, I want to point out, though, and spend most of my time up here because these are the ones that matter to you. Us, United States is in here. And so what you're going to see first off is this one, which is New Zealand. You didn't probably know this, but New Zealand actually had the largest housing bubble. Then you've got Australia, which is actually also has a very large housing bubble. So first off, if you think the United States housing bubble is bad, you probably heard about it if you're not in the United States system, and you'll probably know about it if you're a US citizen, but it's actually worse abroad. And you can also see it's already declined in New Zealand where they were the highest. But I also would tell you that if you look at all these different indicators of housing prices in those areas, they're basically rolling over already. You can see it very subtly in most of these slides. And this is true down here. You can see all the European ones are starting to decline. Over here in Asia, it's a very different story. This is a different region that's much less linked together. These are different economies, different stories. All right, home ownership rates contrasted with 30-year fixed mortgage rates and good, bad credit FICO scores with loan-to-value ratios. A lot going on here. Great chart, but it's going to take some time for us to go through it. So number one, home ownership rate from 67 to 2021. This is this. I just want to point out that home ownership at 65% is fairly traditional. What was untraditional is this ramp to 68% during the housing crisis, and then all the way down to 62%. What I want to point out is, by and large, now the United States home ownership rate is basically at a historic norm. Now below here, we've got loan to value ratios for concoming ones that are less than or equal to 80. So these are ones that have much more potential for the owner not to have a problem. Down here, this is greater than 80. So this is ones where 80% of the loan is backing the mortgage. So these are much more risky. This is less risky. This is more risky from a loan to value perspective. Also, you're going to notice I've got two lines here. One is going to be the greater than 80 and then less than 80. So these are basically the riskiness is the, obviously you have to pay more when there's less loan to value and there's more risk to the FICO score. So here you've got a much wider spread for loan to value ratios that are much higher. And here you've got ones that are much lower. But the basic point is no matter what, you're seeing this ramp up in these mortgage rates. But again, we're not above this previous level back in 2018. We're just getting a tad above it, but there's no question that it's not as threatening as you might think. And if you look at where things were back in that period of time, this is 2018, you're going to see that basically housing ownership rates were about the same. So anyways, keep this in mind. Again, good, bad credit scores, market's pricing a little bit of that in, loan to value ratios, market prices some of that in, and of course the overall interest rate environment and the home ownership rate. Worth knowing about basically everything here, high rates, decent credit scores and loan to value ratios, still can get a mortgage, and you're basically seeing a fairly standard home ownership rate. Okay, housing related employees up here, real and gross housing value added here, and a new record for the commercial real estate price index in the United States. Okay, let's go through this a little bit. First, the black line is the services to buildings and dwelling. That's 2 million people. This is home furnishing stores, which is 400,000 people. So basically, there's a lot more going on in services in this business than you might think. Down here, real gross value added versus gross value added. What I'm going to point out here is the blue line. This is a real, and you can see basically it hasn't gone anywhere. So this business is far by and large about the same size in the U.S. economy. It's always been. We'll see what happens here, but this is basically to be understood. Down here is the real story. It's prices that are driving. And this is, by the way, commercial real estate. Hard to understand commercial real estate booming unless you realize it's also not just offices. It's commercial. It's the warehouses. It's transportation. It's all the things that are going out there in the commercial world. So keep this in mind. It's actually showing you another boom, which is the commercial real estate boom. Okay. So let's get into 3 more backdrop slides here. A decline in U.S. pending home sales index. That's this one. You can see that it's starting to decline in the last few months. But again, this is not out of historic norms. It's basically back to historic norms, not out of historic norms. So number one, declines you're hearing about are only take us back to historic norms. It's not really that dramatic. There is a new record for the Wilshire U.S. Residential REIT Index. So people who are building residential apartments and stuff like that are doing quite well. And down here, you've got to look at a variety of small cap indexes that you can take a look at. I can't get into them today. IWM, this is the Russell, VB and VBR are Vanguard type funds. But the basic point is they've all kind of topped during the Biden inaugural, and they've been consolidated. And now lately they've gone down. But as you can see, it's been a strong run for these relative to these other areas. And there's some consistency actually with the picture here and the picture there. So they're basically risk on is going to take everything up. And that's the basic point here. REITs are coming up with everything else. All right, so that's our backdrop for the housing macro. Now I want to get into a deeper dive into the major housing, construction, building materials, and REIT stocks. This is what you're here for. You're here for the companies, and I'm going to give them to you. All right, 3 housing, 1 mobile, 7 construction, and 1 apartment REIT stock, ticker UDR. And this is that one right down here. UDR is this final one here. That's rental income. This is a REIT stock. So no surprise, rental income is almost 90% of that business. But these are product revenues. And we have a lot of time to go through this, but this is very interesting. This is Pulte, which is 97% home building. This is Will Scott Mobile, which is mobile modular homes, storage, tank and pump homes. This is Leggett Platt, which has bedding products and furniture products. This is Otis, which is elevators. This is Weyerhaeuser, which is basically 80% of which products. Down here, I've got DR Horton, which again is a home builder, 92% holder. This is Lennar. So Pulte, DR Horton, and Lennar are your three home builders. Now we've got Jacobs Engineering. That's kind of in the commercial space. Vinci is out in France. I believe they are involved in contracting energies, a lot of different things. CHR is a different building materials company that's much more international. Obviously, PLC is UK. So these are international. Here you've got your home builders. We've got some people inside, and we're also a lot of materials and commercial space. So again, look at this as a very broad space, and you can have many, many good stocks to find. All right, we can continue on. Geographic pie charts. So these are basically the same companies, and I put them in basically the same places, but you're going to notice that now we're talking about geographic distribution. So for example, Pulte is showing you a very wide distribution, as is DR Horton and Lennar, whereas you can also pick out differences in their businesses by region, but by and large, as you can see, they're basically the same. I mean, it's really not that much different. However, you get over here, you get into lots of different stories. You get into the Otis story, which is 20% China. Here you get Leggett Platt, which is 65% US. WillScot Mobile is 87% US. And down here, you've got Jacobs Engineering, which is 70% US. So to no surprise, these are international ones. They're not going to have as much US business. But again, here is a nice slide for you to get these deck and go through and understand these 12 businesses. Excellent material for you to begin to pick out if you can find a business that's growing in an area, like there's going to be some performance for you as an investor. All right, so let's get into price consensus and EPS surprises of another set of companies: home, appliance, and furnishing, mobile house, and building materials stocks. So here I've got Electrolux. We're back to WillScot Mobile, the one that I told you about. You can see they have a really nice chart. Leggett Platt, which has actually been sold off quite nicely. James Hardie, which is a building materials company and based in the UK. You can see again, nice sell-off for you, but the estimates are looking quite good. And Weyerhaeuser, which is actually at highs, and you see that the run is actually much more new for the lumber businesses. So down here, you've got Vulcan Materials, which also, again, nice sell-off here. So when I'm looking at this chart here, I've got a picture of WillScot Mobile and Weyerhaeuser not really selling off much for you. And then I've got these other ones who have done a nice sell-off for you relative to their earnings estimates. So this is the chart you want to look for, your growth at a reasonable price. Stocks, there's obviously some very interesting plays here for you to use. I definitely recommend getting hold of this information, because here is where you can learn a lot about how to play the global remote businesses. Obviously, something like an Electrolux or Leggett Platt, people are going to put stuff in their homes, and you can see Electrolux in particular, you got a really low price, but you've got declining estimate revisions. Leggett Platt, somewhat to the same story, but hasn't really gone as far as it should. Down here, James Hardie, for example, don't see that much on the estimate revisions, and you do see the big sell-off. So again, this is something that can require much more study, but it is a very useful set of information. All right, here's another set of information. Some of these companies we've already talked about: DR Horton, Lennar at the top, and Jacobs. They've all been in previous slides, and you can see again for Lennar and DR Horton that the home builders have all sold off, but actually for DR Horton particularly, you can see they're just killing it. And Lennar, same thing. There's no downgrade in estimate revisions. So someone's got the story wrong here with DR Horton and Lennar. Jacobs, on the other hand, is probably fairly priced. And then down here, you've got a variety of REITs. And you can see that these basically have a lot of different stories. But again, huge sell-offs in equity residential and Avalon Bay communities lately. Not a big sell-off and change in their estimate revisions. Why is this? Obviously, this is related to the interest rate patterns of the Fed. These are REITs. They are income stocks. So they get sold off big when people could go back into bonds. And you can see that they just tanked. But the businesses are solid. Again, where's the play here? Clearly, one has to ask yourself, what's going on with these home builders? Why aren't they picking up the speed? All right, so major home builder construction and REIT stocks. This is a very complicated chart. one that you're going to have to order from us to get through. But I basically want to point out that these are the names, tickers of what we've been talking about here. There you can see D.H. Horton. This is Lennar. There's Otis. There's Weyerhaeuser. This is Thor, which is this is URI. These are United Rentals, and that's basically a mobile home company. A lot of different firms here. Again, we're breaking out Electrolux, Invitation Homes. All this stuff is worth going through. What you're going to see here is that we've got 2 quarters of actual results, December 21 and March 21, and then actually 2 quarters of next year's forward results. So you got a nice setup here for studying each of these stocks. I've got 1, 2, 3, 4, 6, 7, 8, 18 stocks on this slide alone. So I'm giving you, I said 20, but I'm giving you way more than that. And that's the beautiful thing about this presentation. If you're looking to run a portfolio, you've got lots of ideas in hand. This is a great PowerPoint slide for helping you manage a portfolio and getting it right. Okay, Zacks Rank and VGM scores. Again, same names and numbers here. They're all here. You can see I've got DH, Horton, Lennar, Velcro Materials, URI, all the way down to Electrolux, and all these other different players and REITs. This is basically the same story. And again, you're looking at a breakdown from 2016 going into 2022 of their Zacks ranks. So again, if you're looking for stability for an investment, you want to see these Zacks ranks hold up nicely. And you are actually seeing that, for example, with DHI and LEN. They're getting 1s and 2s. Rare to see them go down more than that. There's a 4 here with Lynette, might be just related to its earnings. Who knows? But take a look at this. Again, great material. All right. Housing, construction, materials, and REITs key equity ratios. Again, tons of material here. I've got 3 breakdowns. These are my REITs. Here's some of my appliance suppliers and things like this. And this is the more standard mix of home builders and commercial rental companies and the like. So here we get the market caps. And then over here, we've got all the DuPont analysis. The one I like, obviously, is EBIT to sales. This is your profit margin. But there's plenty of other things here. The return on equity is really interesting. And the return on capital employed percent is also interesting. Here, obviously, you can see the difference between a REIT and a normal business. These are very, very different stories, and different businesses will show that. But again, over here, if you're looking at actual returns. So this is actually where you as an investor can get some mileage over here. This is the total returns and the price change over the last basically 20 years. So this is a really nice slide for you to get and review. All right, so here we go again. Enterprise value to earnings before interest, taxes, depreciation, and amortization. Typically, when the EV to enterprise value is below 10, that is seen as healthy. So here again, we're looking at some things that are worrisome. Avalon Bay Communities at a 30. Vulcan Materials at a 17. Some of these are really actually quite concerning. Leggett Platt is actually just a little under 10. That would be one that was in good shape. So again, this is a chart. I've got a ton of material here for you to explore. And you can also take it and see what has happened in the COVID period. This is not a recession period. This is the remote working period. So this is what I'm talking about. This is the remote working decision-making that you can take. And look at what the market was buying and selling. This is fascinating. All right, so we continue on. Again, this is the remote working area. These are basically the same companies. This is total debt to earnings for the last 20 years. Remember, the lesson here is higher leverage ratios tend to indicate a company with higher risk to shareholders. So the higher this one is, the more leverage, the more risky it is to you. Again, look who's up here, Avalon Bay Communities. This company can be concerning if you start thinking about it too much. So maybe that's why we do these slides. Anyways, on we go. Major housing construction key equity ratios, number 4, CapEx to total assets. CapEx can tell you how much a company is investing in existing and new fixed assets to maintain or grow the business. So the thinking here is that you're growing your CapEx to total assets, you have a growing business. So again, we want to focus on over here who is growing their business. And again, you want to see this line moving up through this COVID period. By and large, I don't see much information here. You can see that it's kind of stunned these builders. I don't really see, other than people like JHX, which is clearly bumping back up. Most of them are going sideways. All right, reinvestment rate over the last 20 years. The reinvestment rate is the return an investor expects to receive after reinvesting the cash flow from an investment. The return is expressed as a percentage and represents the anticipated profit the investor expects to make on the reinvestment of their money. So again, this is how they're going to do reinvesting the rate, how much rate of return is available. Again, things like OC are looking sharp in this COVID remote working period. Then you can see Weyerhaeuser actually was doing extremely well during the lumber period. Now it's coming back down again. This is actually showing us a little more evidence of a remote working effect, this reinvestment rate. Interesting to notice that versus the previous CapEx versus total debt. These are all telling us how the financial structures of these companies are doing. Fascinating material. I definitely recommend you carry on and look into this. So I will finish up with what's called earnings pureness from 2005 to 2022. And I would point out once again, just like the leverage, this is a story that doesn't offer us a lot of information because a lot of it's converging to 100%. But again, where would I focus my time in these slides? Certainly back at enterprise value, certainly with the equity ratios up here. The first two slides, number 1 and number 2, are your best. That's why I put them in this order. And then from then on out, it's just more confirmation. So that is it for me. I've just done a ton of overview of a ton of stocks. I hope you enjoyed it. It's really about the shares and the slides, and you need to get this information. I thank you for attending, but what I really need you to do is get a hold of these slides. This is stockholder stuff. There's 20 plus things. You need to look into this yourself. This is a portfolio story. You have to find the winners and you have to do your digging. I'm just providing the information. That is exactly what Zacks Professional Services does. So if you're interested in this, these are the ways to get a hold of us. Call us at 866-794-6065. Send us an email to strategycall@zackspro.com. Get us on the web at zackspro.com, or we are on LinkedIn and Twitter. So there's plenty of social media routes for you to get a hold of us. Please do so. Once again, 866-794-6065.